All right. Happy Friday. What's going on, everybody? Uh, all right. So, whew, we're working on our evaluation. We are kind of chilling out here. We're just starting to assess the market. Let's go ahead and jump in. Okay, so we can see that we've pretty much been bearish for most of the day, most of the morning. Does look like we're getting a turnaround a little bit right now, but you can see most of the day we haven't even come out and tested the view app. We're very far away from the 200. Um, so this is our FOMC meeting. I think right over here. Like right in this area. There's our FOMC meeting. And after that FOMC meeting, we pretty much kind of ran up and down through VWAP for a couple of days, up into yesterday, and then sometime last night, the futures market in the S&P started falling down. We've dropped 1%, so roughly $45 or so. It's pretty big, actually, when you really think about it, just in terms of a single contract, dropping that. So what? Here, let's actually do this a little bit. 45 times 4, since we got 4 ticks. So just one single contract. That can't be right. Is that right? $45 times 4 ticks per dollar. Oops. 45 times 4 ticks per dollar. It's 180 times 12.5 for a contract. There you go, 2250. So it's a pretty substantial move to the downside. We're looking at the 5-minute chart here at the moment, and you can see we've only tested view app once. That was at about 5 a.m. my time here on the Pacific. So, but you can see we did sort of hit a low right here, and we bounced off this low 3 times. So we had this one, and then down here where I actually created a new low, and then again here. So we are getting some turnaround on the TTM too. We have a little bit of turnaround as well. And we had that same sort of thing, that same sort of pattern happen right here, where it was kind of riding along this like 200, this 50, 200 crossed over and ran up to the VWAP, but huge rejection off of VWAP at that time. So we're going to be very careful today. It's looking pretty bearish overall. So I think that our best thing that we can do for ourselves is be very careful. Don't take boredom trades. You can see our TTM, this is kind of weird too, like to have this TTM kind of reverse all the way around and then consolidate for a while without breaking out, and then come back here, and then finally when it does get its breakout, it's super weak. Very, very weak breakout. I think I'd be more inclined to take shorts today versus longs. But you can see just indicator based, nothing more. We've got the 9 above the 12, so that looks good for momentum to the upside. But to really have more conviction in that move, you'd want the 9 and the 12 to get above the 35 while the 26 stays low. And eventually, not very long from now, you would want to see the 9 and the 12 get above this 50 in order to really have a push upward. And then our biggest, confirmation of bullish movement would be this 50, this green line here, getting above this 200, which you can see they're pretty far apart. The 50's down at 42, the 200's up at 47. That I know it's only $5, but it's actually quite a big move. And the VWAP is kind of right at 42.50. So long way to go in order to get back above the VWAP. And so I think our best bet here is to be very safe today. That would have been a nice little trade right there, but not really my setup. So yeah. So basically, to put our plan into perspective, we're going to be very, very, very chill today. We're going to take our time today. We're not going to rush. We're going to be calm, very calm. We're going to have patience today, throughout the day, and we're only going to take trades that look really, really solid. We've been doing pretty good in our evaluation. We're up almost $300, and so we're up 287.80. We were up a little bit more yesterday, but we had two trades. One of them that I exited way too early on, just because I was actually attempting to not take the trade, and it filled right as I hit exit. So I ended up just going flat, but lost money because of the fees. And then we had another one that dropped down one tick, and I hit exit on it, and it ripped right back up. And I honestly wish I had held both of them, because we would have made another $120 yesterday or something like that. But it's whatever. We ended up making 90 yesterday. Get some push up here. I wonder if the 50 is going to act as resistance. I might take a long position if the 9 and 12 get above the 35. In the meantime, though, it's not looking too good. Honestly, it looks like it's going to push back down. The 12 just barely crossed over the 9. Not enough to have a confirmation of anything, but this honestly looks like it's going to fall down more. I don't feel comfortable taking a position yet. Nothing looks good yet. I know we could have got some trades in here. That's looking nice. Cyan on the TTM, but the TTM is at 0.2, 0.3. It's super close to a turnaround. The top on this TTM was only 1.6. It's really not very much. I just want to see more conviction in the move. I definitely see a lot more volume happening at the 42.40 level. Just over here looking at the price ladder. This is a nice move through this area. This is a little before we started trading. And I saw this move actually starting to happen. Make sure y'all like, subscribe, and subscribe is the same thing. Make sure make sure you all take the time to like, subscribe, and ring the bell for notifications. There we go. I said it. Got it out. A bleat. That's all, folks. Whew. Pretty challenging there. Check out the links in the description too if y'all want to try to earn funding or join our email list, or if you want to donate directly to the channel, any of those things. If you guys want to check out the links in the description, there's a lot of interesting stuff in there. Okay, we got a doji on this right here at this 35. We rejected the 35 1, 2, 3, 4 times. This 35 is currently acting as resistance just on this little micro area here. What's this looking like on a 5-minute chart? Let me see how close we are to like an actual breakout. We're a long way off. Our last breakout really was that time right there, at like 5 o'clock in the morning. And that breakout ran for almost a half an hour. And the TTM down here, I mean, we're like 11.1 on the 5 on the negative side, on the downside. We got kind of a long way to go before we see another crossover happen like this here. So right now I'm pretty bearish on this. I mean, it honestly does look like it's going to turn around soonish, but right now there's no trade that I see. So we're just being patient. This is the boring and honestly one of the hardest parts about trading is not taking trades that just don't serve you, not taking boredom trades, all those types of things. There's that push to the downside that I told you I thought I saw coming. Might take a short here if it pulls back up. For 237 seems like a pretty decent entry for a short. Wow, that filled all the way up. Kind of glad I didn't go short there. That filled all the way up. That's crazy. Look at that. Wow, that's a huge volume candle. Look at that. The volume is like, here's the rest of our volume here. And look how much higher that volume was. It was almost double the candle size. So the other ones have all been like 4,600, 4,200, 4,500, etc. This one was 8,000. That's insane. Like, so this right here, that is a huge momentous volume candle push to the upside. So that could be a catalyst that drives us up. Just that huge volume right there. Now I'm more interested in going long. Time. 10 seconds left on this candle. It's looking a lot more bullish to me. Joining the bid.
Order filled.
For it to continue to push to the upside. Ooh.
Order filled.
All right, I cut that. That was a pretty big loss, actually. Lost 108 on that. So we lost 4 ticks plus our fee of 872. I tried to go to the long. Honestly, my entry should have been right here for this breakup through the. That's where I was actually intended on the trade. That's where I actually saw it, and yeah, I just didn't do it as well as I should have. That's all right. And look, we pulled all the way back up. Trying for another long position there, but it continued to push without me. But it's looking like more bullish. So we've got the 9 above the 12, above the 35 now, and we're approaching a crossover of the 50. So it's kind of stressful to me. I'm gonna swap this track. Hey, what's up, Heather? Good to see you here. Whew. Morning. All right, so we're still up in our eval, but we did take $100 hit. We're up 179 in our eval. Time we got left 18 seconds.
Order filled.
Filled on that little pullback. Trying to go for 3 ticks, but maybe I need to be a little less aggressive. Going for just 1 tick here now. I'm going to be less aggressive here. I'm going to switch to 1 tick for future trades. Still holding this, but I'm really not liking this. Fill back up, please. $13 seconds left on this candle. Currently down 100 in this trade. Oh, came right back up. Tapped our sell order, but didn't fill. I'm out.
Order filled.
Another L on that one. Still up in the evaluation, but down 242 on the day. This is why I was trying to be very, very careful on the day. We're still up in the evaluation by $45, but that is that's a far cry from the nearly $300 that we were up at the beginning of this. So we're 15 minutes in. We've taken 2 trades, both losing trades, trying to go long off this. And while this original one would have worked out if we would have held it, the second one apparently would not have. I'm switching over to 1 tick, just going for scalps now. Very, 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 very quick scalps. That would have filled our order. We didn't have to take that L. That's so frustrating.
Order filled.
Just looking for 1 tick push up.
Order filled.
All right, got that. Made back $16. Got a long way to go to recover what we lost, but we're going to be very, very trying to be very careful. Made some pocket change on VLCN. I think gave it all back. That sucks, dude. I've been there so many times. It's always a pain, man. Obviously, we gave a lot back to the market today. I switched over to 1 tick because I think it's probably going to be my best bet for actually going forward today. May have to do just very micro scalps. But I mean, like, you look at this on the TTM and like, look at that. Like, this is breaking out more on the TTM than a bunch of our other breakouts have done. Like, look at this one here. This was such a huge rip. And our TTM is even higher now, and we even have better indication now, and it's still fighting it. Like it's still pushing downward, and honestly, that seems off to me. Like that's quite the downward push. I think that this is gonna fill this candle here, though. This one here was nuts. Look at this huge downwick, followed by this just rocket of volume. I mean, this is double the volume that we saw along all these other candles. Very weird candle here. And the fact that this is continuing to push down is just sketchy to me. But I guess the TTM is only at 1.7. So it's really not incredibly powerful in terms of overall. It just looks big because of the scale that we're looking at right now. Is this going to be another candle like this one? Okay, tough day today. So far, we lost 240. We made back 16 and a half bucks. So still up in our evaluation, but barely. So we have to be incredibly cautious with our trading, which I was honestly approaching today with a cautious mindset. Um, and both the trades that we cut, we could have just held through the pullbacks and got it, but the pullbacks are a little too big for comfort. Probably gonna take in some shorts through here. Could have even taken that short. I'm worried about another one of these. It's kind of a slow day today, at least for me. I definitely see trade-ups, but like this candle is practically as big as this candle was. Look, they even tapped almost the same tick. This one went one tick lower. I wouldn't be surprised if we got a green candle on the next candle. Weirdly enough, we're getting a green dot down here though on the 2TM.
Order filled.
Going for just one tick up. Filled slightly higher than I wanted to. Currently sitting at break even on this trade.
Order
All right,
filled.
we got that tiny tick up. Made back 16 bucks again. So currently down 209 on the day. Still up in the evaluation, $78. So tough day. Very, very bearish, by the way. I don't think it helps knowing that, China's economy is expected to collapse in like 20 days. I don't think that markets are reacting favorable, if you will, to that kind of news. I'm glad it filled right there because I wonder if I would have accidentally cut on this drop down to 40.37, because that's basically the same thing that happened here and here. Today is the day for scalping, no doubt. None too happy about that negative 209, but I also am going to be very careful. I'm not trying to push through any of this. Even taking any trades of any kind, honestly, is kind of sketchy to me right now. This 42.37 seems like a kind of a strong level, I guess, that it's bouncing off of. So are you also working on the futures market? Was it Adam? Did I remember that correctly? I hope I did. I was just curious. Are you doing just stocks, or are you doing futures as well? This is still looking bearish to me. Might be pushing to make a new low here. Wish there was a way I can keep this centered. The price ladder. It's very annoying that it will run off the screen. I tried to find some info online about it, but I couldn't find much. I may not stream very long today, just because of the movement of the market. I don't want to overtrade. I already lost 200. That's kind of like at my limit already. I'm glad we made a little bit of it back, but definitely ending the day not nearly as well as we were earlier. So we're up 77.92 in our eval. Getting pushes at the low. I wonder if we're going to get some sort of trend reversal of some kind at 8 o'clock, but it's not looking that way. I def could have shorted pretty well off of this. But so far, just not seeing anything that's really my setup. With the exception of this candle here, this was a nice momentum move down to the downside, but this candle here, honestly, is what sketched me out on this one. Continuing to push lows. I wonder if we'll bounce off these lows soon. Not seeing a candle with that much volume since the one that happened here at 742. This candle's like all red. Look at that on the bulls bears. There you go. There's some bears filling that, or some bulls filling up. Or at least people covering shorts. This is looking so weak. So weak today. Look at this. Even if I like zoom out, can barely even see the view app. We're so far extended off the view app, man. That purple line there is the view app, and we're all the way down here. Huge extension. View app's at 42.49. We're like $15 away from the view app. A lot of extension, and I do think that at some point we'll get a rip back up to the upside, but when that point happens. I'm just reading your comments, sir. DBGI. What's up with DBGI? Digital Brands Group. 49.2 million share float. 2% short float. I might actually shut it down kind of early today. But y'all check out the links in the description. I don't want to overtrade, and I've already kind of feel like I have going negative 200. So I might shut it down. If I look at the 4-hour chart on DBGI, I'll check that out. I don't have my TOS up right now, so but I'll check that out. It's down all the way to 14 cents. Let me jump into my Webull real fast. It loads like so much faster. So DBGI. Wow. Like the movement's like so small on this. Yeah. That one honestly, like that just seems like something you could totally just yellow this if you wanted to. It honestly looks like it's like if I jump out to the daily chart here, it honestly looks like it's trending downward. I mean, look at this downward trend over the last year, or what is that? Yeah, it's a year ago. So it's pretty much just been trending downward, but yeah, it does look like you could do something along the lines of like yellowing this and just being like, okay, put like 25, $30 into it or something like that. But yeah, so please take the time, guys, to like this video, subscribe to the channel, ring the bell for notifications. Hey, it's all good, Tiny, no big deal. I appreciate you staring at charts hard this morning. Yeah, I understand. Use the what did I just read? Oh, use the volume profile indicator. Watch an F take a hit today. Yeah, we took a hit in futures. Honestly, the entire market looks down today. So we're still up in our evaluation, but we were up almost 300 at the beginning of the day, and now we're only up like 80. So I'm definitely going to be. I've been trying to be very careful. I was going for 3 ticks. Both our trades would have worked out, but we cut them because they had huge pullback before. So we ended up cutting them before they rip back up. But yeah, guys, with that, go ahead and click the links in the description. One of them you can join our mailing list. Another one you can donate directly to the channel with our PayPal donation button. Also, guys, if you're interested in earning funding like I am doing right now, there is Elite Trader Funding. Elite Trader Funding is a awesome program. These guys here have amazing customer service. They allow you a free reset at your rebill, which is really awesome. Not every company does that. Right here, automatic free account resets. So not every company does that. I love that they do. They have some amazing offers. 50K evaluation. If you guys use promo code JSBESC, that's JSBEST, you'll actually get 50% off for life. So right now this 165 would be 7250 for life. You get a free reset every month if your account has broken a rule of some kind. So you definitely can save a lot of money in your your efforts to earn funding. Works on every product that they have except for the fast track evaluations. That's only going through the month of August, and that's when you use my link in the description and promo code JSBEST. So be sure to check them out. And last but not least, check out Webull. Webull is a really awesome program. I just had Webull charts up just a second ago. I use Webull every single day to day trade. But if you like trading stocks, options, or cryptocurrency, Webull is a awesome program. Here is Webull right here. I love how fast their software loads. I can pretty much load it up. Click a couple of buttons. Essentially, they allow you to set up like a really quick pin code. Click a couple of buttons and just see how fast it just unlocks and opens up. They have desktop app, web-based apps, so you can use Webull anywhere. I love them. One of my best favorite softwares out there. I use it every single day for day trading. I also use Thinkorswim as well, but I use Webull in addition to that. So if you guys want 6 free stocks when you sign up, use the link in the description. In addition to that, too, I don't know if there's a way for me to share my layout, but I might work on trying to find a way to do that. And look at F taking this hit down here. It doesn't look too bad in terms of having support down here at like 1525. So I think in order for this one to really start to run, what are we on the 5-minute chart? Yeah. So just like with our futures, we utilize the same indicators. We got the 9, the 12, the 26, the 35, the 50, and the 200. And it honestly, this is like doji after doji. It just seems like it's kind of just consolidating in this area. So I don't know why I bothered to do technical analysis on that. I guess because Tiny said she was trading this today. So I just yeah, Webull does rock. I think Webull's a really awesome program. Webull rocks. The phone app is awesome. It's actually the only, in my opinion, it's the only tradable phone app that exists. So I've checked out TOS. I've checked out Tradeovate. Tradeovate is a really awful phone app to be precise. It's a really terrible phone app. But Webull actually has a functional trading app. I've traded on my iPad on Webull before. ES hit new lows. Just continuing to push lows today. So bearish. Such a very, very bearish day. I wonder if this is somewhat in reaction to China's economy situation. Their sort of real estate Ponzi scheme that they got going on. Where they're losing something like $9.2 trillion in the real estate market right now. So I just think that I think that almost a lot of the stuff that we're seeing, where we're seeing sort of these more and more bearish movements that have been happening in the marketplace. So now, granted, we did have a week or two of a lot of bullish action, but I think that what we're seeing in the marketplace right now, where we're seeing so much pullback, I think a lot of that may have to do with China's real estate Ponzi thing that they got going on, because a lot of places are saying that China's economy is about to collapse in the next like 20 days, 24 days, etc. This is the SPY here. And you can see, just like if we pull this out on a daily chart, this is the SPY on the daily. Just over the last, this is 2020 here. We ran up huge, but if you can see, we're getting kind of close to 2020 levels. There's our V-shaped recovery, or no, that's October 2020. Here's our V-shaped recovery. So here's COVID, and pre-COVID, we were only at 327. So we're still way up from pre-COVID, and then COVID happened, and our lockdowns happened. Then we had this V-shaped recovery, as they called it, and we had that 50 cross over the 200 right there, and we've basically been running since. You can see how powerful that 50-200 crossover indicator is. I mean, look at that. Like, if you were using this on, I mean, you would have had a 2-year run just following that crossover right there. Just that one crossover, taking a position right there, and just followed it on just up for almost 2 years straight. But you can also see that, when this finally did cross, that's its downward cross right there, was March 2022, and we've basically been going slightly more and more bearish since. We're coming up on the SPY on the daily and hitting the 200 moving average, but we got a ways to go before that might actually cross back over. So this is what, July. So this was like mid-July right here. We had pulled back to the 370s. We've come back quite a bit since then, but I wonder if we're going to run into resistance here at this 200 moving average on the daily chart, and pull back from there. So kind of a bearish day. I don't know about trading in this area, and just the way that things have been moving today. So like I said, I'm probably going to shut it down a little early. It's been 10 minutes since the 8 o'clock volume rush, and while we did get some big volume come in, which you can see right here on this candle. The only other one that we had that was that size was here at 742, where this candle filled up, double up. And this is basically like, if you look at this, most of the volume is around 4,000, but this candle and this candle are around 8,000. So like double the volume on this candle and this candle. We're continuing to push lower and lower on the SPY, on the ES. But I'm just hesitant to take trades because the action's been weird. Even though you can see that this is a downward trend, we're getting a lot of like price movement, if you will, within the candles, and so that movement within the candle is what could actually be the thing that screws us. I think trading something like this, I would want a larger drawdown available to me, because that larger drawdown would allow me to hold through pullbacks or hold through certain price movement, and wait for my trade to play out. I think that we're going to continue to push downward, although this candle may fill back up to like the 12 or possibly the 9, and then reject off that. So long way to go in order for this to change trends. And I'm just not liking the bearish action. I'm not seeing anything that sets up for my pattern. Hey, Tiny, I'm glad to hear that that somehow, some way, that I'm helping you. That it's that's really kind of why I started doing this. I just think that like my goal here is to build a community. I want to help everyday people, everyday traders, come from wherever they're at and move themselves into a position to where they can actually do this full time and actually have it pay their bills. That's my intention with it. That'd be tragic if it collapses. Yeah, but Tiny, like what goes up must come down, and it's really interesting to think, because when we look at a lot of the charts and we're like, okay, well, stocks traditionally go up. Well, that's true. A lot of times I don't really hear anybody account those stock prices for inflation. It's like, okay, well, the ES or the SPY prior to COVID was at like 327, right? And then COVID happened and whatnot, and then we drop and then we run back up, and now we're at like 421. But inflation has gone insane. So like, is 421 like? What is the actual buying power of that 321 versus that 421 after that 2 years of just ridiculous, endless Fed printing of money to endlessly increase inflation to astronomical levels? You know what I mean? Like, so did the SPY actually really go up? Or like, because that $100 difference from COVID, you know what I mean, did it actually really go up? Like, we could look at it, we could see that it is $100 more, but does that count for inflation? I don't know. It won't collapse in China. Won't a collapse in China be bad for us? Yes. A collapse in China would be hugely terrible for us. It would actually be really bad globally. China's the second largest economy behind the United States. So it's the United States and then China. But you have to understand, though, China's real estate system is designed like a Ponzi scheme. Essentially, what happens is they pre-sell houses, and then as they pre-sell houses, they use that money that they collect from the pre-sale to fund that project, but then they only fund that project so much before they pre-sell more houses. So they're constantly having to bring in new home sales in order to build past home pre-sales. So they're constantly in this position to where they're having to catch up with it, and they have thousands upon thousands upon thousands. Like I think it's close to six figures. So it's close to 100,000 units that they owe people, that people have already purchased homes, that they've yet to fulfill. And this is across 300 different companies. This is across 280 different cities. There's thousands and thousands of homes and millions of people that have purchased homes that have not gotten delivery. They have not received the home that they pre-bought, and it's because a lot of these Chinese real estate firms have been just taking that money and using that money to market and advertise and sell more pre-sales. So essentially, they're not delivering, and by them not delivering, what's happening is the people are sick of it because they've been waiting for years to get their home that they've been paying mortgages on, that they don't yet, that those homes don't yet exist. And so so they're starting to protest. They're starting to say, hey, you know what, I've been paying this mortgage for X amount of years. Sometimes, like I read one case where the person had been paying for their mortgage for 6 years. So 6 years they've been paying for a mortgage for a house that's not even built. And so, you know, they're tired of it. And in a lot of that, on top of that as well, a lot of the people in China as well can leverage up to like 50x of whatever their income is. So what that really means is, like, if you made 50K a year and you wanted to buy a house, you could get approved for a loan over there up to $2.5 million. Here it'd be like 250K. You know, so it's very like that amount of leverage that they've been providing to people for the better part of a decade. All of that stuff is coming due, and these real estate firms are not being able to. Yeah, no way, that definitely would not fly here. And so a lot of these mortgage companies are not being able to pay back their debts. They're not being able to pay back their treasury bonds. They're not being able to fulfill the even building of the houses. So so there's a major issue there. And right now, the total debt that these 300 plus companies owe is over $9 trillion, $9.2 trillion as of my research this morning. So in all of that, that debt, and that debt is obviously, it's funded from overseas. It's funded from China. It's funded from Chinese citizens. It's also funded from the UK and the US and Japan and a bunch of other countries who have loaned that money out to these real estate firms, and they're having trouble paying a lot of that stuff back. It's estimated that there's only 20 or so days before China's economy collapse. China did do a bailout plan of $44 billion in order to help pay for some of this stuff, but you know, $44 billion against 9.2 trillion is, I mean, it's a drop in the bucket. And so that's definitely something that is going to affect the markets globally as more and more people begin to protest that. And China has responded to those people who are protesting by locking them up, by rolling out tanks and a bunch of other stuff. So that's something that is being censored a lot from social media, although some of it is kind of making its way. Will that collapse the housing market? I honestly think that the housing market, first off, needs a pullback. There's no question in my mind that the housing market is overextended. It really is, especially in Washington State, is one of the most extended housing markets. Some markets around the country, around the United States, have seen some pullback. Some of them have seen pullback in the areas of like of like 30% was one market. I can't remember which market it was off the top of my head, and that's really gonna annoy me. But some markets have seen pretty significant pullback in the real estate market. But like the Pacific Northwest, for example, this is still one of the fastest growing housing markets in the country. And I absolutely think that our housing market needs a pullback. Now, if China's real estate market does indeed collapse, then I think it'll have global ripples, global tidal waves, really, um, because a lot of those companies that's going to cause a lot of those companies to default on those loans. That's going to cause China to potentially default on loans. And so all that would affect every aspect of the economy, including the real estate market. Given like if you were to look at if you were to look at like the SPY from like 2008, I don't know if we can go back that far. I was looking at a chart side by side from 2008 or 2007 to current, and they look like identical. Here's 2007 here, and there's 2008. Obviously, we have like huge, crazy run up over the last bull run. As they continue to say, longest bull run in history. But we got a long way to pull back to like 2008 levels, but it was the chart patterns that I was looking at that looked the same. And I don't give as much credence to price as a lot of other people do, and that's because they don't tend to adjust these for inflation. I think that we will definitely see a huge pullback in the housing market here, and a lot of consolidation, and a lot of hedge funds buying up single family homes and flipping them back to U.S. consumers or turning them into rental properties. I would say that purchasing property is probably one of the best things one could do for their real estate portfolio. That's not a recommendation. It's not financial advice, all that type of stuff. But I do think that we'll see a pullback in the housing market here, and I honestly hope that we do. Frankly, I think that we had an opportunity before COVID, around 2019, 2018, 2019, to allow the recession to happen, and we propped up the markets more than we should have. And after COVID, we absolutely propped up the markets a little too much. And the reason why I see it is I just think that the word recession is so scary to so many people, and politicians don't want it because they're like, oh, if a recession happens, I'm not going to get reelected. And frankly, I think that like recession is healthy and recession is good. And I think that if governments allowed it to happen more and kind of stayed out of the markets, those things would just kind of pull back on their own in the way that they're supposed to, and they would deleverage themselves in a healthy way, and then buyers could buy it back up, and they could redo leverage at that point. I just think that every time that if we go back to like 2007, 2008, before that market crashed, the governments were already propping up the economy for a while. For like 2 years they were propping up the economy before it all came crashing down. And I just think that like I personally think that if governments would step away from the market to a large extent and more or less just regulate it, keep it safe and fraud free, I think that would actually make it significantly healthier for everybody. I think it would make it to where things deleverage when they're supposed to. Recessions happen when they're supposed to, and when they happen, they're not that bad. I think that the more we prop it up, it's just like extension. It works the same way. Like when we look at extension, where we're looking at from the View app or whatever, the more that we pull away from this, the harder we're going to rip back toward it. So, and that the same is true of the markets. When we see the markets like continuing to be propped up for 1 year or 2 years at a time or something like that when they should have already recessed at that point. Not only does that tend to lead to more inflation, but also it tends to lead to harder crashes that we didn't need, that we could have avoided. Um, like I just think that like having a 10 or 15 or 20% recession is easier to manage than like a 35-40% just rip down. um that's we didn't have to have. And so those are just my thoughts. That's my opinion. Obviously none of this is financial advice. Take do all of your own research, of course. But that's just kind of my thoughts, my opinion on it. I am very much interested in seeing what happens with China's economy, um, and very much interested in seeing, what will happen. Will they prop it up even further? Will they will they try to prevent this thing from happening? The fact that they're giving people 50 times leverage on their income is scary, frankly. I mean, as a consumer, I personally would be very scared to take. I would not take a loan like that personally, uh, but also I understand um, what it means to a lot of people to be a homeowner. It makes a major difference in mindset, in how we feel about ourselves as humans, etc. So I think, I understand. I understand people wanting to take that risk in order to try and provide a better life for their family. So I just hope that for those people who are protesting and those people who are dealing with that type of thing, that they get the best possible outcome. And I do hope that there is, to some extent, a healthy recession that allows for a lot of people to participate in the markets. I think recessions are the best time to get involved in the market, and I think they're actually the easiest time to make money and to make profit and to develop your wealth. That's my opinion. Um, yeah, recessions, yeah, they are used as a threat. And I think that's weird. Personally, I think that people should be educated that recessions are healthy. They're something that is inherently healthy in like consolidation and like reducing expenses and all of that type of stuff. I just think that like there's nothing wrong with companies like reducing their expenses and changing the way that they operate and streamlining processes. I think that's something that companies should be doing all the time, but a lot of times they're not doing it and they don't do it until they have to, where they're put in a position to where it's like, okay, well, we got to cut jobs, and a lot of that is preventable by managing expenses and streamlining things along the process. And when the recessions do come around, if you've done your job right during the bull markets, you shouldn't have to cut that many jobs unless sales just decline dramatically, or revenue declines dramatically. And when I say dramatically, I mean like to a point like 30-40%. But that's just been my experience. Won't take that risk again, as caught in the 2008 housing bubble. Bubble burst just started in 2006. Yeah. I can tell you, I personally very much regret not buying in like 2012. Because I was in Las Vegas in like 2014, and like you get like a 3 or 4 bedroom house for like 150 grand. It was just crazy, crazy cheap. And I regret not buying at that point. But yeah, we ended up going a lot longer, not trading, but that's cool. The markets don't really look that tradable to me, honestly. Um, got some little bit of a turnaround here, but it just hasn't. Like, I haven't seen that many like things that set up the way I wanted to in order to actually take trades. This right here would have been a setup right there. But we keep getting these like little micro setups and then like pullbacks like this. Like that's such a big pullback for this very tiny move. Um, that is just like, yeah, it's just sketchy to me today. And I already lost $200, so I'm trying to lose more. Still up in the eval 77.92, but you know, gotta feels like a lot of work to get back now. So we were like 16% of the way, and now we're like 4% of the way. Um, yeah, we were about 286. We were 14.5%. Now we're like a lot less. So we got a long way to go in order to get there, and I'm just gonna go slow. Today's not looking real favorable in terms of trading, so I'm gonna just shut it down there as far as the trading itself goes. Foreclosure screwed you for 10 years. That sucks, man. Yeah, I that was exactly like my situation. Like we actually moved out of state, and we had like perfect credit, and some some bad stuff happened when we moved out of state. And then in that process, by the time that we were actually in a position to be able to buy revenue wise, we didn't have the credit, and now we got the credit, and so we got a lot of ways to go. I'm just thinking about like. I think that we're going to see a market pullback pretty badly by this time next year. I think that like June 2023 or so is around the time that we'll likely see a market pullback, and at that time, I think that's when we'll start to see the markets really start to decline in the housing area of things. Obviously, we've already seen sales slow down a lot in housing markets. Construction starts are falling. Um, and so I think that this is kind of just the very beginning of this is the very beginning of the market pullback. So we're essentially seeing we've got rates going up, but prices haven't really come down much. And I think that even though housing prices have fallen, it's not. We still have a ways to go in order to really turn around. You can see this is from CNBC. Home sales fell nearly 6%. So even though home sales have continued to fall pretty much month over month for the last few months, we're not getting a ton of pullback in price yet. The housing market slides into a recession, yes, but also too, I was also seeing that construction starts are down, home sales are down. Sales dropped about 20% from the same month a year ago. I also think that year over year measurement is not like the best measurement personally, but what else are you gonna do, right? It's about housing pricing, and I think that like that's where a lot of these I think that's where a lot of one of the reasons why a lot of sales are dropping is because like housing's not affordable, period. And I think that in order for housing to really become affordable, I don't know. I think that if the Chinese economy collapses through their real estate thing, that we're going to see a lot of that hit the United States and globally. And I actually think that that'll be good for a lot of people who are kind of on the lower income spectrum. So yeah, exactly. So, but yeah, so we're gonna go ahead and shut it down there. We're gonna stream for a while. Go ahead and check out the links in the description. There's a link to our mailing list. If you guys join that, we talk about things we don't talk about anywhere else. And in addition to that, there's a PayPal donation button you guys can utilize. And if you want to donate directly to the channel, all helps to support the growth of this channel and whatnot. On top of that, you guys can check out Webull. Webull will give you 6 free stocks when you sign up, so you'll automatically be in the green when you sign up for Webull. And last but not least, if you want to earn funding like I'm working on right now, you guys can check out Elite Trader Funding. Super dope program. Y'all can use promo code JSBEST. JSBEST will actually give 50% off lifetime of any of the products, any of the evaluations that they have here at Elite Trader Funding, with the exception of the fast track evaluations. Each evaluation, you have like a drawdown and a profit target. With the 50K evaluation, which I personally think is one of the best in the market in terms of price, you can actually take a max of 8 positions. So that's 8 minis or 80 micros with a drawdown of 2,000 and a profit target of 3,000. So you really could earn funding pretty quickly here for only $72. And at the end of your rebuild cycle, if for whatever reason you haven't passed your evaluation and you're in the negative, or you broke a rule of some kind of that, only if you broke a rule, rather, they'll actually give you an automatic free account reset when your evaluation cycles. So definitely awesome opportunity there. You can actually earn funding all the way up to 300K, and imagine just 50% off that. I mean, that's like $300+ off. Pretty insane. You could also do the 100K static evaluation, which is the one that I'm working on. But the 50K evaluation, in my opinion, is probably one of the best values out there on the market. With all that said, guys, we're going to go ahead and shut it down. Please like, please subscribe, please ring the bell for notifications. And I love and appreciate each and every one of you. Thank you so much for showing up. It really does inspire me to want to continue to show up. I want to thank my regulars, Tiny, Abhishat, and a couple of the other people that have shown up here. Thank you very much. Love and appreciate you guys. And we'll see you guys on Monday. Have an amazing weekend. Happy Friday. And peace.